Hey, real life traders and students from around the world, how you doing? This is Jeremy Alexander Newsom with, of course, Real Life Trading, and I wanted to make you guys a Friday real life stock review. Yay! Hopped over here to the Real Life Trading Facebook page and want to give the recommendation to Gary Murphy. Thanks so much for posting. He wants to look at Whole Foods, so Gary will look at Whole Foods. Bob, we will look at TKMR. Let's see, whiskey. We'll look at JOY, and Zane, we will look at, what is this? Adobe? Let me scroll this down. Give me 1 second. Where is this? Comments. Yes, Adobe. Okay, ADBE. All right, I'll go check out both of those. So hopping over here, I'm going to look at GoPro and then Apple first. I think I made a determination yesterday or the other day that we're going to look at Apple every single real life stock review. So try to hold me to that. If I miss it, I'll make it up to you. So real life stock review, Monday, Wednesday, Friday. Apple will be looked at every single day. I'm going to do my best to remember that. GoPro. Today, we looked at this just the other day on 12.10, and it closed below the support line, and at that particular point in time I said this is a bearish confirmation, and I am more bearish than bullish. The next day, we had a very, very nice sell-off, and today, realistically, is an inside candle, but it's a retest of the hourly exponential moving averages. So we traded right up into the 20, and we're kind of beginning to fail that. So my thought is if we're going to hang out here probably for the rest of the day, but if we do start making some lower lows and lower highs, the overall thought process could be a little bit more bearish than bullish since this is a retest gap on the hourly chart. It probably should fail or roll over a little bit farther potentially. But I did get in today a 70-72.50 bear call spread. Bear call spread. Expiring in 2 weeks. I did that for a 25-cent limit, which is about a 10% ROI for 2 weeks. So not too shabby. And so I'm going to see, and just as long as GoPro stays below that level, I will be just fine. Let's hop over to Apple. And Apple, we've been watching Apple and keeping a very, very close eye on it. And today, oh my goodness, this was our trading plan from yesterday and the trading floor. So ladies and gentlemen, the trading floor is not only day trades, but it's a lot of swing trades as well. I mean, it's really, really solid blend of both. So yesterday, we were looking at Apple as a move, and as it moved below 112, as you can see in that note, I simply mentioned, hey, if it starts failing 112, more bearish than bullish. Well, yesterday was a black candle, right? Gaps down, that's a retest gap, and notice it traded up, retest, failure. Beautiful, beautiful trade for anyone who got a chance to trade that on Apple. Just simply phenomenal. Coming over here to the hourly chart, you guys can see it pretty well as, also. Black candle, and yesterday we mentioned this literally verbatim. If you get a chance to watch the review, the third hour yesterday, we talked about, okay, here's 112. If it breaks 112, let it come back and retest this potential double top neckline. There's the retest, there's the failure, and there's a lot of money to be made on Apple this morning if you got a chance to catch that almost $1.50 move on Apple. That was nice. Very, very good job, students from around the world. Phenomenal, phenomenal. Let's go look at the DIA really quick. DIA, again, nice black candle, making some lower lows and lower highs. It does appear that we're going to be finally pulling back to this little support level right here. Maybe a little bit farther since this is a pretty bearish candle, and I'm interested to see how and if that plays out. Same thing with SPY. SPY, nice little gap down today, and it's trading to about 201.85. So there is some support here for sure, and we definitely can bounce here, and this is a decent retracement, but I don't think it's going to be as far as we go. I think we do go a little bit farther, and I'll still be interested in buying the bounce overall. Okay, so let's look at the 2 day trades that were taken, and you guys might be gleaming some of this from today, but Adobe is something that we looked at yesterday. Again, yesterday in the trading floor, during the market hours, and also for the recorded students, this was part of our trading plan. So if Adobe gaps above 74.50, now I did think it was going to gap down. I did, but it did not, so that's fine. I had the plan anyway. 74 bullish gap and go. And today's open, boom, right on this little support level, and just started going bananas. So let's go to the hourly chart and kind of look at the hourly, see how that played out. So the last candle on the hourly was a black candle. That's a trap candle. 15-minute was a black candle, and let's see if the 5-minute, very, very, very small white candle. So you might have waited for a retest on Adobe. The retest would have been probably right about there or right about here, bullish. Stop would have been placed about there, and or stop would have been placed right about there. Either one looks like it's working just fine. John Higgins took about 2R from Adobe this morning. So Higgins, great job. He's done for the week. I think he's up nicely, probably 5 or 6R for the week, which is, you know, smashing for John Higgins. So I'm proud of you, my friend. And I don't know who else took this trade, but it works great. You know, if you did take it as a gap and go, if we go to the 1 minute, almost a perfect gap and go. But if you look at the 1 minute candle, entry could have been approximately 74.46. Stop could have probably been about 73.62. And right here, you got 2R, and now you're looking at about 3 or 4, maybe even 5R on Adobe if you really pull that one in nicely. So in my opinion, phenomenal gap. Again, one that we looked at yesterday. This is our trading plan from yesterday. And even if you don't get a chance to come to the trading floor live, we do record and send out the videos. And so anyone who got a chance to watch the recording was able to glean a little bit of our sentiment on Adobe yesterday, preparing us for this morning. Joy was the one that we're going to look at. And Joy, what a phenomenal retest gap Joy was. Very nice little support. So there's the support level. Prior candle was black, gap down. That's a retest gap all day. So the 5 minute chart, and we can see how the retest played out just simply perfectly. Here's the 10 exponential moving average. So it traded down, trade up into the 10 exponential moving average. Here's your evening star reversal pattern. You could have taken it bearish at about 46 and some change, and or you could have taken it bearish below the evening star pattern, so bearish about 46.82, stop at about 47.23, and there's your 2 R's. And so at this point, we're probably trailing Joy. If we hop over to the 15-minute chart, at this point, looks like it's going to be trading up a little bit and expecting to come into the 10, and then probably rolling over maybe a little bit more for the rest of the day. So we'll keep an eye on this one during the trading floor to see if there's any other good opportunities for this to continue to play out. Whole Foods is more of a swing trade, Gary, from what we're looking at the moment. Here's kind of my Whole Foods setup. Whole Foods, beautiful gap previously. We're trading bullish. We pulled into the exponential moving averages, the 20 to be precise. And we want to bounce off the moving averages. So my end of day trigger on Whole Foods, if we close about 48.61, I am more bullish than bearish. And our stop will be 47.06. And then from there, we are kind of at a resistance. So the next target, at least a good one, I think is based on this gap. Give me about 3 seconds to find it. Right about here. Right about there really would be a pretty decent target, and it's about 50.28. So the risk to reward's okay. And if you subscribe to us on YouTube, you'll be getting this YouTube video and this real life stock review well before the market closes. So this is a end of day trigger, so I'll wait for the last 15 minutes of the market to see how and if that's playing out. But you know, we could do put sales, bull put spreads, something of that nature in here. And that's kind of what we did and talked about right there when we started bouncing off the 10 exponential as well. But very nice on Whole Foods. Looks pretty. Definitely looks more bullish than bearish. And let's look at TKMR last but not least and see what this is doing. Tech Myra Pharmaceuticals. No idea what this is. Volume's a little light on this one. So I probably wouldn't be trading this one personally. Well, I'm personally not trading this one, but we'll see how it looks. Here's a support line. Here's a support line. Let's see if there's anything right about where we stopped recently. Yeah, I can see some support resistance there. It looks to me like we're going to battleground. So this is a support resistance zone where there's a lot of things going on. You guys can kind of see, I mean, there's, you know, so we have resistance here. This is all the white space right there. We have some resistance here, some support right there. That's kind of what we're battling at the moment. If we're bouncing off of 1261, it is a good morning star reversal pattern. Kind of looks like one. Volume did pick up just a little bit. Let me look at the long-term moving averages and see where they are. Long-term moving averages, we are below them. So truth be told, I'd actually be slightly more bearish than bullish on TKMR. If I was in shares or consider doing a bear call spread or a call sale, I would try to do it somewhere up in this area, maybe above $17, as I could expect this resistance at about 15 to really be pounded out pretty strongly. And I might do something like that overall. But if we do get a close above the wick of Wednesday's candle, I would be slightly more bullish than bearish on TKMR. And a giant shout out to Chris Tom. or I had Panera lunch with this morning. He has a bear call spread on Yum that we filled. We filled that bear call spread on this day, ironically enough. It's either that day or this day. I actually forget. But one of those days, we filled a December week 5, 80-82 bear call spread. So that should just be just dandy. And I think that's really about it. I'll hop over to Alibaba just to make some of you guys happy. Alibaba. Here's kind of my expectations on Alibaba. A lot of pennant patterns going on, ladies and gentlemen, in the market, and I want to close before I go more bullish than bearish on a lot of these trades. I took some of my profit of Alibaba off the table on this day right there because our expectation was at about 105 and some change. There is some intraday support right there, and if I come to the hourly chart, you guys will be able to see that pretty nicely. So here's the hourly chart right there, and during the market hours, during the trading floor, I exited some of my puts right about there. My stop at the moment is 108 for my put that I still have, and I don't know what Alibaba is going to do. I truly do not. It should roll over and probably trade to 100, but if it does close above 108.07, I would be a little bit more bullish than bearish, since we are kind of bouncing, off the exponential moving average, bouncing off the 50. We do have a nice buying candle, and if we close above there, we'd be above the exponential moving averages as well. So just kind of keeping a close eye on that. Guys, thanks so much for watching the real life stock review. Make sure to tune in next week. Going to have some exciting news, maybe Wednesday or so, some announcements that I have some upcoming plans for real life trading. I think you guys will be stoked about it. All right, ladies and gentlemen, have a great weekend, and I'll see you next week. And until then, remember, love life, live life, and trade it. All right, see ya.